Yes, so we'll start with another new standard, which is intangible asset theory maximum. Practical is very few, so it should happen much faster because theory part I have bifurcated it. Before I would proceed, I would ask to you, which is most valuable, students, in this world right now, tangible assets or intangible assets? Now you say, sir, we are discussing intangible assets, so intangible must be, no? Or tangible is more valuable, value-wise, if we look. Tangible. It doesn't depend. It's intangible, Baba, right now. Okay, I'll tell you why. What is the proof for what I said? For this, I have to take back you to Mahabharata. In Mahabharata, one incident happens. Do you know that incident? War is declared, means we will fight. Now, this guy, Duryodhana and Arjuna come on the same point of time to ask help from Krishna. You know the story, you must be knowing. So, Krishna gives first offer to Arjuna, telling, look, I saw you first. Duryodhana becomes very upset. He starts thinking, now Arjuna is going to ask all the army this, that and all. And he gives an option. He says that, look, on one side, all my army I will give with all their weapons, which is a tangible thing. On other side, I am there alone, even not using my weapon. Now, what do you want? And he gives to Arjuna. Arjuna, without second thought, like what I was expecting from you, without second thought, you should have told intangible is most valuable. Okay? Arjuna says, no, I want you. There is no second thought. I don't want your army. Then Duryodhana feels very happy for all the tangible things he got. But ultimately, we know the result. See, that one intangible changes entire course of your success. Correct, no? So, what is our powerful intangible? Our brain. I told you, it is everything, whatever in earth. Because the day this stops, brain stops, literally our physical body may be still alive. Doctors declare the person is dead. So, if you want to distribute or donate the organs, you can please do that. That means we don't exist without our thinking in this world. Means without our thinking, we may be physically existing, but it's not, society doesn't recognize it. Followed, no? So, should we not use our intangible? And see, we are living in a world of intangible only. Have you seen any war in our lifetime? See, those were the days, maybe 100, 200 or 300 years back. War was the year which there was no war, no, that is a year of peace. My father and grandfathers have not seen the war only. See, today wars are happening is because of political, but if you see one in the humanity, one big powerful impact has happened, that means wars are not happening only nowadays. But previously, you don't know when the war is going to happen. Just any point of time war can happen. Why? Because tangible assets were very powerful at that time, and war was happening only for that tangible assets. Take your asset with me. That was the purpose, war was happening. But right now, why the wars are happening? Because the world has shifted itself to intangible, because by declaring war, you know for sure that you are not going to achieve anything, because what maximum you can take? You can take the tangible assets. But the world is an intangible now today, Baba. Everything goes with the thinking process, the education, whatever that you cannot steal, that you cannot take, you cannot make somebody to work for you. USA is top because they have stolen intangible assets from different countries. They are attracting. Followed, no? See, given a choice to me, 10 lakh students, YouTube subscribers for me, is it not an asset for me? And 10 lakh followers. It's an asset today, people, and it's an intangible asset. And why somebody will follow? How can you make somebody will follow? That comes from your thoughts, your marks, your intangible assets. You can earn, you can achieve anything with the intangible assets. So, nice, no? Nice standard, no? Okay, so let us understand. See, these are all, leave it. Tangibles makes no sense today's day. Intangible will give you your knowledge and the skills, your network, your brand, your processors, your what Bitcoin you have got, YouTube subscribers, the followers in Instagram or so, whoever, no, that's your asset. That is going to give you cash flows more than what your tangible PP or vehicle can give you. Now, which intangible, how rich I am today. So should I not have a balance sheet? Because with this balance sheet, if I want to attract people, like if you take anybody's balance sheet, intangible would be very high. You look into the investment in shares. Is it not an intangible asset? Is that you take any balance sheet, financial asset 109 is consuming everyone. If you get into the scope part, okay, I'll tell you one beautiful story, nice story. You must have heard about this. One machine gets damaged. Nobody will understand what is the problem and entire operation gets halt. They don't know what to do now. Then one old fellow was called. He goes to the machine. He looks into the machine and understands everything. At one place, he takes his hammer and hits 2 times. Machine starts. Everybody is very happy. Huh? Miracle, very nice. So, should he not be paid now for his service? So, they ask, what is your charges? He says, 5 lakh rupees. The finance manager gets angry. Huh? What did he do? He hit 2 times with this, with the hammer. For this, should I pay 5 lakh rupees for hitting 2 times? He said, then he gives, okay, I'll give you one breakup of this invoice. Okay, for to hit with the hammer 100 rupees, but to know exactly where to hit, no, that is why I'm charging you 4,99,900. Followed, no? That is why people say, Abdul Kalam says, knowledge is power. Having knowledge is not important. Integrating is power. Integrating is not important. Application is power. Okay, that everybody, and it is not anybody's property, I'm telling you. We are born with the humans. There are all those things that have been loaded in our DNA. Only thing, we have to realize who we are. That's it. The day we realize it, who we are, what is our strength, then nothing can stop us. It's just a matter of time to realize. Anyhow, come back, and this is the intangible asset. Huh? Now, before we go to the problems, let us understand the theoretical aspect of the standard. See, it's a small standard, and it has got a flavor of your Ind AS 16. So, we should not spend much time to understand on this standard. Only additional things we will learn. First, we are going to speak about the identification. What is an intangible asset? You remember in PP, I gave the example of that Anjali Kasra. Is that an asset? That's the first thing. No, if something is not itself is an asset, you cannot do. If something is not intangible asset, recognition doesn't come into. Recognition means passing journal entry. That doesn't happen only. Second, recognition. How do I recognize? Even though it's an intangible asset, will I recognize it? If I have got YouTube subscribers, say 5 lakh YouTube subscribers, in my balance sheet, will I show an asset? Is it an asset? Is it an intangible asset? Will I show? Why? For this, the answer lies here in this stand. So that's why you start looking around you. Brand, should I recognize? When? Business combination only. There are logics. So what is that logic for accounting purpose? That you need to understand after this. Initial measurement, subsequent measurement, stand small thing. See, if you look at the scope, they say that intangible is a very vast concept. It applies to everyone. See, none of the time I discussed the scope except this standard. Why? Because I told you, everywhere is intangible only today. It says if you are holding intangible assets as an inventory, Ind AS 2 will become applicable. Like for me, like my video classes, inventory, Ind AS 2 becomes applicable there, not 38. Deferred tax asset is also an intangible asset, Ind AS 12 will be there. Lease of intangible assets, Ind AS 116. Assets hiring from the employee, arising from the employee benefits, employee skills, Ind AS 19. Financial assets, okay, not employee skills may come here, but whether recognized or not, we will see that. Financial assets will Ind AS 32, goodwill from business combination will go to 103, in non-current assets held for sale 105, and from contract with the customers 115. Contract asset is also intangible asset. Now the measurement and all is not governed here. It is governed by the respective standards. After you distribute all this to all these people, if anything is left, then we will look into what we are supposed to do. The standard says that identification, what is an intangible asset, or for this, what is an asset? A universal definition, asset is any resource what you control because of the past event, like you must have purchased it, constructed it, and which is going to give you future economic benefits. If something doesn't give you cash in the future, it is not an asset, and write it off, don't keep it in your balance sheet. Now, what is an intangible asset? It is an identifiable asset. That means, first of all, it should have fulfilled the definition of an asset. It should give you future cash flows. That cash flows, you should get it. Somebody else is getting from the asset. It is not your asset, it is their asset. You should get it. You should be able to direct it. But it should be identifiable, non-monetary. You cannot fix it in number of price. No fixed amount there. And without any physical substance. Because if all these things are same, with the physical substance, it would have become Ind AS 16. TPE. Since it is not having a physical substance, okay, it is intangible. Now, one question one added here is, what is identifiable? Always every single theoretical answer of Ind AS 38, you have to speak about this Ind AS, because this is a very unique to Ind AS 38. In examination answer or whenever you write mock test, I would love to see this particular word with your explanations. Otherwise, this answer is not complete. Now, what are the examples of intangible? Like marketing related can be trademark, artistic can be music works, software, my chart book, intangible asset no, for me. Customer list can be an intangible asset, broadcasting rights, franchisee agreements, so many intangible assets are there. So first thing we have to figure out, what all intangible assets do we have? Can I recognize it in the balance sheet? If yes, what measurement? Subsequently, how should I measure it? Now, identifiability. Our standard says that intangible asset is identifiable if it is separable or if it arises from the contract. One among the two should be there. It is or condition here. What do you mean by separable? Separable means it is capable of being separated or divided from the entity or sold, transferred, licensed, exchanged individually or together with the CGU, regardless of what you want to do. Your intention is not important, but can I look? It is like SPPI test. It is like a contractual test. It is like a product level test. To tell you, this is like a product level test of 115. At the product level, is it distinct? Like this, at the asset level, is it separable? Then, okay, sir, at the asset level, not separable. No problem. At the contract level, it is separable. There it was, and we have to verify. Again, we can also verify or, but not in that contract. I have just told you one similar example. What is the example? Contractual, trademark, patent, license, etc. Separable, customer list, recipe, processes. For example, I will give you an example. Ideal ice cream. You love it? I love it. Okay, that too, Gadbad ice cream. Only I eat that. Now, Ideal ice cream, they have got intangible assets with them. That company, yes, what is that? Okay, so primarily they have got two types of, they say that ideal, in bracket they write R. What is this? This is what? Trademark, logo, whatever. Now, can they sell this? Now, is it contractual? It came from legal. They got one legal right. Now, tomorrow, can I buy that ideal logo from them, paying them money? Yes, that means that logo is separable. They can carry on their business of selling ideal ice cream by a different name. But what I will do, I will buy that, and pie ice cream I will sell with that in the brand name of ideal ice cream. So, ideal ice cream, this brand is contractual. That means it's an intangible asset for them. Now, am I interested in this logo? What I am really interested? Recipe. Because the moment I'll put ideal ice cream and I will sell pie ice cream, very first moment, see again, brand comes from consistency. The moment you start giving different taste, different time, your goodwill is lost. Consistency is always important for anything in life. Now, the moment I give different flavor, people will not come. So, I am not interested. I am interested in recipe. But have they registered their recipe? No. They have kept it, maybe kept it as a secret. They know it, their recipe. Can they sell their recipe to me without selling their brand? Yes, that means this recipe is capable of being separate. Do they want or not, that is different story. Or they may sell together with this brand. But for them, they have got two intangible assets. One, the recipe to prepare that ice cream, and the brand under which they do it. Followed, no? So I say, see, now whether they have recognized that recipe in their balance sheet or not, that we will see later. But is it an intangible asset for them or not? Why? One of the two conditions should fulfill. Are you clear about this example? Separate contract. Now I got one. See, sometimes something may be contractual but not separable. For example, I got one license to operate nuclear power plant. Is it contractual or separable? Contractual. Legally, I got the right from the government to start one nuclear power plant. Can I separate that license from the assets? I can sell only that license. It is not separable. I cannot sell only license there. Required, whoever buys that license, they have to do the plant. But yes, it is contractual. Follow? No, that's why it is a or condition. I hope you are very clear with this. So, when should you recognize? Okay, first of all, if it is, check whether it is intangible or not. How? Check whether it is identifiable. If it is not identifiable, it is not intangible. Now, if it is identifiable, then you can recognize in your balance sheet only if it is identified, contractual or this, and you should get future economic benefit, a characteristic of asset, and the cost can be measured reliably. Followed, no? Now, what they said in the study material, you see one answer when you can recognize if it meets the definition of intangible asset and you can measure the cost reliably. Now, I am telling you right now because you may see a different version of the definition there in the study material. But why I am telling you this definition? Because in every theory answer, whatever we write for the exam, we are going to write this. We will standardize it. Because instead of one place they have written this, some place they have written another definition. We will maintain one single definition. Their definition is when you can recognize when it meets the definition of intangible asset, when it is identifiable and future economic benefits are met. So these two things together is the definition of intangible asset. Are you clear now? Now, can you develop the internally generated intangible asset? Obviously, but first of all, technical feasibility should have completed. Till that time, it is considered as a research. The research process is not an intangible asset because you are not sure about the future cash flows. Once the commercial process is established, development you can capitalize. Second, there should be intention to complete. Technical feasibility should have been established. Project should have been sufficiently financed. Cost you should be able to measure and expected benefits you should get. If all these conditions are fulfilled, then the development portion of maybe software or whatever it is, of internally generated intangible asset, you can start recognizing. Now, any cost incurred creating computer software, you should consider as a research expense up to this technical feasibility. After this, if all these conditions are fulfilled, you can start capitalizing. So, generally, no, this is one element which we are seeing, technical feasibility. There is a cutoff point for research and development. However, you cannot recognize certain items because they are internally generated. Why? Goodwill, brand, customer list, research cost. The point why you cannot recognize this is you cannot expenditure or the cost. The second part of the definition, it will fail. Recognition principle, it will fail. Because problem is you cannot identify when you have given, like, see, from past 5 years, I got some student list. It is my asset. But how much money I have spent for that? Very difficult to distinguish. There's a standard said, okay, Baba, don't get into the business of recognizing this thing. Internally generated assets, you don't recognize it. Clear? Now, how to measure it? I'll just move it because I told you it's very similar to intersection. The standard says, see, your measurement depends upon the scenarios of acquisition. if you have separate acquisition, like one to one you have purchased, or you started to construct, always you measure at cost. However, in case of in-process research and development, in Ind AS 103 we have came across, there is one exception. If you are acquiring one acquiry for the purpose of research, because they have got something, I told you, Google example I told you, in 1999, Yahoo offered $10 lakh to this Larry Page and Sergey Brin to sell their search engine, because they thought they must be threat, because their Google search logic was very good. They rejected that offer. In 2014, Google purchased Yahoo. Now, when they have, okay, chalo, let us assume that Yahoo really purchased Google in 1999. In 1999, was Google a business? It was an R&D at that time. They just came with one search engine. No commercialization, no advertisement revenue and all. But 103 will apply to them, provided certain conditions will fulfill. Now, in that case, this is a research process is going on. They can, even though the research expense, they can capitalize it. We will discuss more. If you have exchange barter, somebody's customer list for something your assets, or acquisition through government grants, or acquisition through business combination, in all this situation, it will be initially measured at fair value. Okay, clear? Yeah, we will discuss one by one, and then we will move on before we move to the subsequent measurement. In fact, we can cover and then we can straight away start looking at the Q&A. Separate acquisition, we know that always you should measure at cost. What does that cost include? Purchase price, all directly attributable cost. Now, directly attributable employee cost can be there, transaction cost can be there, cost of testing can be there, but only up to like the asset is ready for use. What cost you cannot include? Cost of introducing new product or service like advertisement, promotional activities, cost of conducting the business in new location, training, administrative. These things you cannot do because it should be part of your expense. Now, separately acquired intangible asset recognized for the price paid, because when you pay some money for acquiring, say for a customer list, if the institute says, if anybody interested, I am ready to say, give the student's contact number of every student in India. Will I purchase? Yeah, it's a nice students contact list. If I can get, I can use it for advertisement. Now, am I going to get future economic benefits? Yes. So the price paid itself reflect. Okay, this is one language in your examination answer. Does it have got a fair value? Does it get a future economic benefits? Yes. When I pay the price to get that student list, that itself reflect that there are economic benefits associated with that list. Otherwise, why on earth I will pay? Suppose Indian Medical Association will come and say that I will give the contact list of all the student doctors students who are pursuing medical. Will I go and buy that? No. There may be some specific people who will buy it, but I am not interested. For me, it has no future economic benefits. And can you measure the cost? Obviously, I have paid. No. That's why when you pay something separately, if it has got a future economic benefits, then your payment itself reflect that it has got a benefit and you can recognize it. Now, what about the in-process research and development? I told you, generally process research costs should go to P&L account. So, what Google might have done, all their research cost charged to P&L. Now, I am going and acquiring Google. What for? For their research work only. Because I find that there is a significant advantage for me in that research. Now, what I can do, since I am paying cash, what for? For their research. Even though the research on their standalone balance sheet, it has not been capitalized, it has charged to P&L account. Since their research papers are very valuable, in the process of business combination, I should recognize it separately from goodwill at its fair value, provided it meets intangible definition, asset definition. That means, can that research paper can be separable? Yes. Or have they applied patent? Yes. Whatever it is, one among the two. Am I paying cash to them for that? Yes. Then recognize this research cost. It's called in-process research as a separate asset. So your accounting entry would be net assets account debit, IPRD account debit, goodwill balancing figure to purchase consideration. If this exception was not there, what would have been my accounting entry? Net asset account debit, goodwill account balancing figure to purchase consideration. Both are intangible only. Goodwill is also intangible, IPRD is also intangible. But what standard says? Yes, you can recognize it. Don't say that it is research, because since you are paying price for it, you can do it. But once you take it and you continue the research, you have got a research where IPRD where in consolidated balance sheet and not in a standalone, because in standalone research cost will always go to P&L. But at a CFS level, you might have paid for some research cost which you have capitalized. Okay, what if you continue that research? Then going forward, further research expense in the CFS will go to P&L. And after development is done, then you can capitalize it. Understood the difference of accounting here? We are not talking about SFS here. IPRD is not going to come in SFS, it will come in the business combination. Amortization depends, like that's why we are separating goodwill, why we are interested to bifurcate. Because if we bifurcate, we get at least better basis to amortize. So we have to think now. Like you remember, there is one case, there was one engineer called Neha, another engineer called Utkarsh. They were arguing, one person is telling this is perpetual life, another person is telling it is only 4 years. At least somebody will apply their mind and can tell no, how long this will come. So amortization is a case-to-case basis. Here we cannot sit and discuss, because it goes with what item it is, what industry it is, what environment it is, what time it is. Followed, no? Now, amortization also we'll discuss, because there is something called a significant predominating limiting factor and all. We have to speak about that now. Development will come. Then it is common both in SFS and CFS. But in IPRD, you see one difference between your SFS and the CFS. Certain things in both the SFS you will not find. Which one? Research cost. Suddenly in CFS will come. But at what value? Fair value on the date of acquisition. Sorry? Not required. No, that's what I am telling. No, that's the exception here. Because if technically feasibility was there, they would have capitalized. No, they say that it should meet the definition of intangible asset. Recognition of intangible asset, they didn't say. Recognition means technical feasibility should have come. Definition means it should have given you cash flow. It should not be intangible. More importantly, it should be identifiable. Is it identifiable? That's my question. Yes, either separable or contractual. Anyhow, one question. Entire this thing, there is only one question. Just understand it. Yes. If it was development phase, already in their balance sheet you would have found. No, acquiree's balance sheet you would have found it. Followed, no? So this is an exception. Then what about the asset acquisition? I need not talk to you. This, does it seem like, have you seen this flowchart? Copy paste for me from Ind AS 16. So first you need to check, is it a commercial substance? No. Book value? Yes. Fair value? Which fair value? Asset given up, top priority. If followed, no? Same story. What you do for Ind AS 16, Ind AS 38, Ind AS 40, not 40, sorry, not 36, Ind AS 16, 38, 40, investment property. Same slide I'll be using in all the 3 places. So I don't want to discuss, because we have discussed in detail. Now what about the government grant? Have we come across anywhere where we acquired an intangible asset through a government grant? Yes, where? Sir, you are? Sorry, any keyword, any landmark word? Sorry? Deferred tax is a government grant to you. Bilwara and Jabalpur project. Landmark question on 115. Financial asset model and service concession agreement. Financial asset model and intangible asset model. They will toll and all, they will permit you to collect the money from the public. Followed? No. There we applied that intangible asset model there. So they say that sometimes you may acquire certain licenses free of charge, but there you spent money for construction, then you acquired it. Then, or for a nominal consideration by way of government grant, like airport landing rights, license to operate the toll. As per Ind AS 20, entity shall recognize the intangible asset at the grant initial fair value. So these are all the exceptions to measure the asset at a cost. Followed? No? These are all, here in all these circumstances, initial recognition is going to happen at a fair value. Yes, so now we can look into the theoretical aspects of the recognition.